Hey there, 𝗍𝗵𝗶𝘁 with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about investor relations and the value of news flow to drive engagement. And the key is, when a company has news flow, it creates natural engagement with investors. If there's no news flow in between the quarter points or printing the quarter points, you quickly become irrelevant to the investor community. And whether you're a public company or a sell-side equity research analyst, if all you're doing is publishing an earnings release or publishing a recap of earnings, you quickly become irrelevant. And that's where it becomes important that, depending on the size of your company in terms of market cap, news flow can be this magic fuel to drive engagement. If you're a mega cap or a large cap company, it's less important. But if you're a small, mid cap, micro cap company, news flow becomes a really important fuel to get investors engaged with your story. So what do you do if you don't have a lot of news flow? Well, that's where industry news flow can become really impactful for the company and shareholder engagement. And why is industry news flow so important? Well, it allows you to talk about your narrative in terms of the industry, your narrative and how that news impacts your story, and then how that news flow impacts the competitive landscape. And if you can do these three things with a piece of industry news, you're going to build credibility with investors, and you're going to drive natural engagement with your shareholder base. And so that brings me to why I'm on location today, this Sunday. I'm here at Rush University Medical Center because in this past week, Rush really unleashed their Rush Connect, or direct-to-consumer telemedicine offering. To me, this is a really big piece of news in the telemedicine and healthcare industry. And if I were public at Access Telecare, where we do acute care telemedicine, this would have been a great opportunity for me to drive engagement and build relationships with investors. I would have been able to talk about how the news flow clearly shows that digital first is where the industry is moving. Our belief is that digital solutions come first before in-person care. And that as long as it's a presentation to a medical place anywhere, whether it's hospital, outpatient, wherever, telemedicine digital should come first. Secondly, it shows you that there's revenue pressure at health systems. Why else would they be creating a direct-to-consumer telemedicine offering? They're going to sell directly to employers to compete with Teladoc and American Well. Third, it shows that there's some pressure in the direct-to-consumer telemedicine space. And then fourth, it actually shows that telemedicine is mainstream, especially in direct-to-consumer, and by corollary, it's showing that acute care telemedicine is becoming more and more standard and mainstream as well. And I think the importance here is, by offering some of these views and being able to talk to the investor base about what happened at Rush, we can show, hey, this is good news for us, even though it may be competitive, and it shows that we're in a unique position to drive and support a digital-first care model in the medical setting. Thanks for watching.